Hello friends, in this video I'm going to explain you something very important and something very different that you should know when it's come to investing your money in stock market and in any kind of in mutual funds, in any kind of funds. The term which I'm going to explain today is CAGR, compound interest. So CAGR, compound interest, plays a very important role in the terms of long-term investment. Like if you are doing long-term investment, if you're doing any kind of investment in stock and in mutual funds, in any kind of funds, compound interest, CAGR, plays a very important role in that. Like if I take an example, like if there is a trader who invests some certain amount of money in the stock market, and after some certain amount of time period, his or her money get double and triple as compared to their principal value, principal amount that they have invested. So the interest rate which helped to grow their money during that period of time, that interest rate is known as compound interest, and the interest rate of that compound interest is known as CAGR. So CAGR and interest rate are both the same things. There is not much of a difference between these two terms. But just CAGR is much more, you can say, technical word as compared to interest rate. And if I take one more example, like if there is a trader and he wants to earn almost 14 to 16% of the return from the market annually, so he can also say that he wants to make his return double and triple with the help of 14 to 16% CAGR annual. So I hope that you're able to understand what I'm really trying to convey here. So from now on, I'm going to explain you much about CAGR, and I'm going to tell you the power of compounding, like how this compounding thing, compound interest work in your investment strategies. So as you can see on the screen, there is a picture, and this picture, you can see that you can kind of like get an idea that how compound interest really works. Like suppose if you invest in some certain amount of money here, and if you have patience and if you invested it for long-term investment, like for long-term purpose, then your money is going to become this much of money with the help of right compound interest. For that too, you should have the patience, like patience of almost 30 to 20 years, and you must have the knowledge of how to pick a good stock, how to pick the quality stock for the investment, for long-term investment, because only good stock and the quality stock going to give you the much more higher compound interest. And the higher the compound is going to be, the higher returns are going to be after some certain period of time. So the moving further, here you can see on the screen that there are two formulas. The one formula is going to help us to find the CAGR percentage, and the second formula is going to find us the final amount. So for taking out the CAGR, you should know the final amount, you should know the initial amount, and N, which written is in this formula, represent the investment duration. And if you know all these three things, and if you put all these three numbers in this formula, you're going to get the CAGR percentage. And if you want to calculate the final amount, for calculating the final amount, you should know the initial amount, and R in this formula represent the compound interest rate. And if you know all these three things, you can put this in this formula and you will able to calculate your final amount that you're going to get after some certain period of time, after a certain period of duration. So right now here I have taken an example, like suppose if I have invested some amount of money like 2 lakh rupees in the stock market in any kind of particular stock, and I know that the stock is going to give me almost 15% of annual CAGR, and I have invested my money in that stock for almost 10 years. So my time duration is going to be 10 years, and my CAGR percentage is going to be 15%, and my initial amount is going to be 2 lakhs. So if I put all these three things in the formula from which I can calculate the final amount, and the final amount that I'm going to get is almost 8 lakh rupees after 10 years. So you can see like how just investing 2 lakh rupees in the stock, you can really make the 8 lakh rupees in just 10 years. And if you increase your duration, like investment duration from 10 years to 20 years, your final amount is going to be 32 lakhs, something like that. And if you increase it to 30 years, your final amount is going to be 1 crore 32 lakhs. And if you increase an investment period for almost 50 years, your final amount is going to be 21 crores. So this is the power of the compounding. This is the how compounding works. This is the how the compound interest works. This is how CAGR works. Like if you select, you have just invested this small amount of money and you are getting the 15%. 15% is really an average CAGR that a stock and company can give. So the 15%. So it is very like it is very sure. If you investing 2 lakh rupees in quality stock, the stock which is giving you 15% of CAGR, and if you have patience of 50 years, you can really make this much of bigger amount from just the small amount of investment. So you can see like this, how small this number is and how big this number is. If you compare these both these numbers, you can see that. So this is the how compounding works, this is the how CAGR works. But you really have you really need so much like high level of the patience level, because if you like don't have really that kind of patience, you can't able to make that kind of money too. So this is the power of, you can also say, long-term investment. In long-term investment, patience is very needed, and in long-term investment, good stock picking is also very needed. So moving further, I have taken some real life examples. Like I have pick up the three stocks, and I'm going to tell you like that how you can calculate the CAGR of this particular stock and how you can calculate the final amount. If you have invested some certain amount of money in this stock for some certain amount of period. So the first stock is going to be Bajaj Finance, but before that, I want to show you the monthly chart of the Bajaj Finance. So wait a minute. So here you can see right now I have opened the monthly chart of the Bajaj Finance, and I'm going to take like in 2013, the lowest point, the lowest level that Bajaj Finance the stock has touched is almost 100, like 200 points, the lowest. And the highest the Bajaj Finance stock has touched is almost like gone, has almost 8,000, something like that, 8,000 point. So the final amount is going to be 8,000, and our initial amount is going to be 200. So this is how it's going to be work. And the duration of time is going to be 10 years, because this all action is happening in 10 years, in the period of 10 years. So let's move back to the calculation. So here the lowest which I'm going to take is almost 800, and the highest going to be going to take the 8,000. And the investment duration is going to be around 10 years. So here the final amount is going to be 8,000, and the initial amount is going to be 800, and the N is going to be 10 years, because this all action is happening in 10 years of duration time. And the CAGR, which is coming, like CAGR we are getting for particularly for this stock, is almost 62%. So it is a little bit above average, but like it's a really good thing if it's above average. And the final amount, like for example, if you have invested 2 lakh rupees in Bajaj Finance for 10 years, and if you are getting the CAGR of almost 26%, so the final amount that you're going to get after the 10 years is almost 20 lakhs. So just for like, if you have just invested 2 lakh rupees for 10 years and getting the CAGR of 26%, you are getting 20 lakh rupees. So this is so much of big amount as compared to your initial amount. And the next stock is going to be Maruti. So first I want to show you the chart of the Maruti, monthly chart of the Maruti. Hmm. So right now I have opened the monthly chart of the Maruti. As you can see, in 2013, the lowest point that Maruti has touched is almost 1,200. And we can say that. And the highest point that Maruti stock has gone almost 10,000. So the final amount we are going to take here is almost 10,000. And the initial amount we are going to take here is almost 1,200, around 1,200. It's going to be our initial amount. And the investment duration is again going to be 10 years here, because this all action is happening in 10 years. So let's back to the calculation. So here the low I have taken 1,200, and the high I have taken 10,000, and the investment duration I have taken almost 10 years. So if I want to calculate the CAGR of the Maruti, so if I put all these three numbers in this formula, so the CAGR I'm getting in case of Maruti is almost 23.61%. And the final amount, like if I invested something like 2 lakh rupees in the Maruti for 10 years, and if I'm getting the CAGR of almost 23.61%, so the final amount that I'm getting after the 10 years is almost 15 lakh 85,000 rupees. So as you can see, like if you just invest 2 lakh rupees for 10 years, you are really getting this much of a return. So this is a very good thing, right? Like this is so much as compared to your initial amount that you have invested. And the next stock and the last stock that I have taken is like HDFC Bank. So before, like again, I'm going to show you the monthly chart of the HDFC Bank. Here is the monthly chart of the HDFC Bank. So the again, the lowest is we are going to take almost 300, and the highest we are going to take almost 1700. Yeah. So again, the final amount is going to be the 1700. The lowest amount is going to be almost 300. And before that, I want to say, like, I want to convey you one more thing. Like in the COVID time, every stock has given you the chance for the investment. Like you can see the COVID time, the stock has almost touches low, but like not their lifetime low. But yeah, you can see there is a tremendous downgrade in the stock, and in not in only in this stock, but in every stock, in every consumer stock, in every stock in the market. Like every stock has given you a chance, a golden chance for investment in them in the time of in the period of the corona. So moving back to the calculation, if I want to calculate the CAGR of the Maruti, so sorry, HDFC Bank. So here the low is going to be again 300 and high is going to be 1700, and the duration of the time is going to be around 10 years. So I know all these things. I am going to put these three things in the formula, and the CAGR that I'm getting in the case of HDFC Bank is 19%. And if I invested 2 lakh rupees in the HDFC Bank for 10 years, and if I know that I'm getting the CAGR of 19%, so the final amount that I'm going to get is almost 11 lakh 38,965. So as we can see, like you have just invested 2 lakh rupees in the HDFC Bank for 10 years at the 19% of CAGR, and you are getting this much of return. So that is really good thing. Like it's almost so much bigger amount as compared to the initial amount that you have invested in the stock market. So this was the thing that I want to explain you today. This was this thing like CAGR, like how CAGR is very important thing, and you should know about this thing. Like this very good thing, you should know like how your money is growing, how his money actually is growing, and how you can like do it by yourself. Like you really don't have to invest in any kind of mutual funds. If you have that kind of knowledge, if you know what is the compound interest and how it's work in the case of every stock, if you know how to calculate the CAGR, you can calculate the CAGR by knowing the low of the stock, and knowing by knowing the high of the stock. We're going to consider the high as a final amount and low as an initial amount. And you can going to consider 10 years as the like investment duration in every stock. And by this, you can able to find the CAGR of the stock. And if you find that CAGR is very good, if you find that CAGR is comfortable for your investment, you can invest some certain amount of money in that stock for almost 10 years of duration. Like the duration is only depend upon you, like if you want to invest for 10 years, if you want to invest for 20 years, that's going to like if it's good, if you are doing for long-term purpose, so it is really good because it's going to give you much more return as compared to that. So this is the thing that I want to explain you, the power of compounding the stock market, and this is how the compounding works when it's come to investing in the stock market, investing in the any kind of funds. Hope you're able to understand that. Hope that I able to make myself clear, like what I'm really trying to convey here. So thank you for watching.